Hi there, welcome to Kneppy Invest and welcome to the 6th of August 2025. Time is currently 3:12 p.m, so just under 1 hour left of trading today. Okay, the agenda for today's video, we'll go through the ASX today, a pretty good day, looks like. Talk about the best and worst performing sectors, indices, and companies. Then we'll turn attention to the top 5 stocks of the day. For me, the stock of the day was a no-brainer. However, I sort of did miss a company that released their results last night. So I'll talk about that company when we look at the top gainers of the day. And that company had, or that stock had a potential to be the stock of the day. And then after the stocks of the day, we'll have a look at the chart of the day, which was inspired by not one of your comments, but by a Facebook page who just threw this company out there in terms of possible rebound in the share price. Now, before all that, I'm just going to have a quick look at this article I found on Market Index website yesterday or the day before. It's called Make ASX Reporting Season Easy, Buy Winners, Sell Losers. And I absolutely agree with this, but Kerry Sun has data to back this up. Now, I'm not sure if it's Kerry Sun or Bell Potter's Richard Copperson, but there is some data to back this up, that if you buy a company that beats expectations, more than likely you will do fairly well. And if you sell companies that miss expectations, you will do better than if you kept hold of those companies. So they do have some data to back it up. They also have some examples, including Metcash and Hansen Technologies. And this is something I do anyway. This is something I do. I look for breakouts in charts. And the best sort of breakout is when a company releases something really positive, not only results, but also positive trading updates, like profit upgrades, that sort of thing. Those are the most powerful type of announcements. And one of the reasons they do say in this, why you do get not only on the day, but you get months and months of possible share price increasing, is because brokers have to update their models. They have to put new information into their models. You also might see short covering that as well, and that can lead to a significant re-rating in a company's share price. So this is something I might track during the rest of the reporting season. I'm going to keep a track of all companies that release pretty good results, and this is just based off the initial reaction from the market. So based off the one-day reaction from the market, can the momentum keep on going either way? And at this point in time, I have written down 5 companies, including the stock of the day today, Credit Corp, Recon, one of the other companies that released results last night, and Corvus. I haven't seen any bad results yet, but we only have just begun the reporting season. By the way, Credit Corp share price, how has it gone today? Flat, we'll call that flat, and which is not bad. After the share price has rallied a fair bit in one day of results, you will see a fair bit of selling. In fact, in this article, they say, don't sell when this sort of thing happens. You're going to miss the potential rises to that keep on coming. And the other one was Recon, and share price up 6.9%. So nice continual momentum for Recon. In fact, this chart is starting to look a little bit more interesting. Okay, and by the way, Corvus just keeps on going up. Is it down today? No, keep on going up. Anyway, okay, so now talking about that article, now onto the ASX today. What a day, another great day. Without doubt, we're probably at record highs with the XJO. I'd be shocked if we're not. Let's have a look. 8,000, yeah, look at that. This is a nice chart. So remember, we had a little bit of weakness end of last week, and I thought maybe Monday will start out pretty negative as well, but it hasn't. We've had a really good week so far. Now, just because we had a good week doesn't necessarily mean that's going to continue, but record highs, this is a great looking chart for the XJO. So you could be bearish, and you could remain bearish, and the XJO just could keep on rising, because just because you might be right in the end, and we might see a correction in the market, you could be out when it comes to timing. That correction could be another 2 years away. And in the meantime, the market might go up another 10, 20%, and you miss all that. Okay. So pretty good day for the XJO. I did notice, I had a quick look at trading economics and mentioned Asia has been weak today. Yeah, Asian markets rise. Oh, no, I read that wrong. For some reason, I thought that said Asian markets drop amid tariff uncertainty, because it's like, have this tariff uncertainty, but Asian markets are rising. So it's sort of conflicting information there. Okay, anything else here? Oil rises, gold holds near 2-week high. Australian industry conditions improve. AI Group. New Zealand jobless rate rises, something we might be seeing a little bit more. And Japan's nominal wages rose 2.5% year on year. There you go. Fastest pace in 4 months. Yeah, it's not that much. Okay, so let's have a look at the best performing sectors. And again, just like yesterday, I don't think we're going to see many companies down or sectors. I'm going to guess one or two sectors. I'm going to say one sector is down. I'm going to say Staples is down today. Oh, yes, Staples is down. Utilities down as well. Defensive. I forgot about utilities, but no surprise there that defensive is down. And best performing sectors, materials, energy, real estate, discretionary, and IT, all up over 0.5%. Gold's had another great day. In fact, let's have a look at gold. I haven't actually had a look at gold chart for a few days, and gold, oh, that's interesting. I thought the gold chart would be looking a little bit better. That's because it's the Aussie dollar. No, Aussie dollar's not doing anything. Yeah, interesting. Gold's had a really good day. Don't know why. Okay, and that's it. ASX 20 only up 0.58%. So maybe a little bit of weakness in some of the more defensive companies in the ASX 20. Woolworths, maybe Transurban, Telstra might. I think Telstra might be up. So I'm going to say I'm going to say 5 companies down. 15 up, 5 down. 14 up, 6 down. There you go. And there's 6 companies down. Telstra, should have gone with that. Transurban, Woolworths. So I would say that Telstra, Transurban, Woolworths might be the most defensive companies in the ASX 20. Yeah, I think they might be. So maybe there is a bit of rotation out of defensive into more risky assets. So that might be meaning the market is a little bit more ebullient with what's happening with the markets. Anyway, and what else is down? ANZ, WiseTech, and NAB. Funny enough, WiseTech's down. So I thought maybe rotation from defensive into WiseTech and Pro Medicus. Best performing company today is stock of the day, REA Group, up 6.59%. Yeah, that was sort of a no-brainer. And Goodman Group's had a good day. A few REITs released their results today, including Charter Hall Long Whale REIT, CLW, and CIP, which is Industrial REIT. I sometimes will have a look at these announcements, but I didn't today. But I'm pretty sure the share price of both companies is up. Okay, now on to ChartWatch ASX scans. Fortescue, Woodside, Whitehaven, Coal, Crozier. I might have a look at that later. I'll just open that up. 5 ASX 200 stocks that will drive market sentiment this reporting season. Oh, might have to have a look at that as well. Okay, now on to the top gainers. Rhythm Biosciences up 52.63% on nothing. They actually did receive a price query from the ASX. BMG Resources up 37.5%, very close for me talking about that company, but I had to talk about another company. Lindian Resources in the top 5, so I can talk about that later. Infomedia, fair enough, that's in the top 5 as well, but it's on a takeover. I don't usually talk about takeovers, but this takeover has me intrigued. So I'll talk about that later. And the one company I do want to talk about in this video is, well, right now in the top gainers, is Pinnacle Investment. Share price up 8.73% on results. I missed this one because they released it last night. Pinnacle, so this could be a nice little buy with the share price up 9.64%. So I missed it. They released it just after market had closed, and I didn't look at it. A lot of times I will have a look at announcements released after market is closed, but this morning I did not do that. And yeah, so I had a quick look after I did see they release results, and because I saw the share price was up, I was like, why is share price up? Oh, God, they released results. Revenue up 33.7%, profit from continuing operations up 48.8%. Look at the profit. It's greater than the revenue. Wowzers. The profit is greater than the revenue. This company is existing on margins above 200%. Wow. So obviously that is not real. There's some sort of one-off in their profit. But some people will believe that. Go, earnings per share, 63 cents. So 63 cents, wow, this company is cheap. Well, actually, it's not that cheap. Yeah, anyway, So why is their profit so much higher than the revenue? I actually have no idea. Right, this company is sort of like a fund managers of fund managers, something like that. They own a lot of fund managers. So this must be the list of fund managers they do own, including Plato Investment, Palisade, Hyperion, Foray and Prizes, Sol Corp. I'm pretty sure that's what they do. They're a fund manager of fund managers. I might be wrong with that. Okay, so let's just have a look at their. I won't have a look at their presentation, but I'll have a look at their annual report. I'm just going to see why the profit is 2 times revenue, because that's weird. I've never seen that before, unless there's a one-off. You might see it in a one-off. So let's have a look, see at their revenue, and right, because you can see a lot of costs and share of net profit of associates accounted for using the equity method. 129 points. This looks like it's an ongoing thing. So it's not a one-off. It's a thing they actually do. And so this must be from the fund managers they own. Yeah, there you go. So what is their revenue? Where does their revenue come from? I'm going to delve a little bit deeper into this company because maybe this is something that's ongoing where the revenue is not a lot, but then their share of net profit of associates is much bigger, and that is something you have to keep an eye on. So maybe this is a real thing, that profit and that earnings per share is real. That earnings per share is at 63 cents, which means, by the way, this is a whole full year. Yeah, so we're talking about a PE ratio of 40. Yeah, based off that PE ratio of 40, which sounds okay for this type of company. And share price up 9.64%. Let's have a look at the chart. So this is one, buy companies have had a good result and a good reaction from the market. So let's have a look at the chart for this one. And yeah, nothing wrong with this at all. I don't mind this chart at all. I like this chart. This could be a nice little sneaky buy. And the other thing I'd say is the one-day candlestick. It's ending up as a really nice one-day candlestick. So that's Pinnacle. What's it called? Pinnacle Investment Management Group. Share price keeps on rising. Okay, let's go back to this. Shop gainers. And I think we've talked all about, or everything here I want to talk about. Now let's have a look at the top losers. Again, nothing much here. I could not find here. Amplia is in my top 5 stocks, but you can just see the turnover for the rest of the company is fairly low. Astute Metals down a fair bit. The one I do want to talk about is Resolution Minerals. Share price down 13.16% on a pretty big turnover. This one was really interesting. So I thought they must have released something maybe a little slightly negative. But there was a takeover bid for one of their projects, or maybe their only project. And here it is, unsolicited 225 million offer received for Horse Heaven project. Seems like they only acquired this. Yeah, look at this. On the 30th of July, Horse Heaven acquisition completed. Now all of a sudden, there is a takeover bid for this Horse Heaven project. Now, I have not had a look at how much they paid for this acquisition. Do they mention a price here? They don't really mention a price. Might have to go a little bit deeper into their announcements. Because $220 million offer for this project sounds pretty big. And maybe this is it. What's it called? Horse Heaven. Horse Heaven. I just want to see how much they paid for this particular project. Is it this one? Horse Heaven. They're talking about it shares a boundary with another big company. All I want is a number. A number. How much did you pay? In consideration for the acquisition, the company has agreed to pay the vendors on aggregate cash payment of $1 million and issue the vendors an aggregate of $440 million fully paid ordinary shares in the capital of the company and 222 million options. Okay, still does not give me an amount. What does that equal? What does it equal? What does it equal? I'm just getting peeved off right now. Anyway, so 225 million, this unsolicited takeover, and I noticed that the market cap of this company, what's it called? Resolution Minerals, is only 81.56 million. I was like, what's happening here? What is happening? But the share price is down 13.2%. I have no idea. I would have expected the share price to be up. And to do initially the share price was up. It opened at 90 cents. So initially the share price was up about 20%, and then all of a sudden it's just dropped. So a lot of I have no idea. This was a little bit of an interest to me. So obviously there is some reason why the share price is down on this particular offer, because it's a massive offer, but maybe on a company that is worth this much. So obviously something is happening here, which I don't quite understand. So let's have a look chart for this one. RML, Resolution Minerals. And yeah, the share price has rallied a lot, and all of a sudden you can just see the massive one-day candlestick. The share price has dropped. What would be that? We can actually measure it. Share price has dropped. Whoops, I've got to do it again. Made a mistake. Share price has dropped 35% from its high. Yeah, okay. And if you have a look at the 1 minute chart, people got really excited when they saw this. Really excited. Share price opened up 24.32% on open, and they're in the red right now. They're down big. They're down big. So sometimes it doesn't pay to buy on open. Resolution Minerals. Otherwise, I have no idea why the share price is down. Okay, now on to the top 5 stocks of the day, because there's nothing else in the top losers. And we'll start off with an acquisition between TPG. Well, TPG Telecom is purchasing Infomedia. I have no idea why. I don't see any similarities between these two companies. Infomedia is a software company for cars or something. I haven't looked at why. They should have some sort of rationale behind this. So TPG, there we go, at a cash consideration of 172 per share, 41% premium. But I just don't understand why. Now, sometimes you see a presentation, there it is. No, that's yesterday's. So I'm not sure if there's a reasoning or why they're doing it in here. I could be completely wrong, but it's very long. Anyway, it's just weird. TPG is like internet, and IFM or Infomedia is like software. For some reason, I'm thinking software for cars. I could be a little bit wrong with that. Software for cars. I'm just going to have a look at the most recent announcements. A lot of buybacks. Okay, half-year results announcement. And a leading global provider of DaaS and SaaS solutions that empowers a data-driven automotive ecosystem. Yeah, something to do with like software for cars. So I just don't see the link between TPG, internet, that sort of thing, and Infomedia. So I'm just wondering why TPG is acquiring Infomedia. And by the way, the share price of TPG is down by 4%. So maybe the rest of the market is going, what? What's happening here? I don't know. It's weird. It was a weird one. The other one was at 9:47 a.m. They released a really interesting announcement titled "Incorrect 60-Minute Timer Attached to TPG." I actually opened this up because I was like, "What the heck is that?" And this was from the ASX, just saying incorrect 60-minute timer attached to TPG. TPG was put in a 60-minute timer at 9:20, 12 seconds this morning. This was an internal error. Please disregard. I have no idea what this means. I have no idea what a 60-minute timer is. I'm wondering, just Google it. ASX. Well, funny enough, Google's giving me a timer. ASX forced to reverse 400 million TPG share price fall. I'm wondering, let's have a look. See if Motley Fool just sort of, this was a result of a Oh, okay. Telco did begin trading this morning, initially plunging a nasty but it's not a nasty 4.27% before the shares were placed in a trading hold. They'll place a trading hold after that. And that announcement released at 9:47 a.m. I have no idea. Anyway, unfortunately, it was a result of a major snafu by the ASX itself. Yeah, I still don't know what a 60-minute timer is. There's something I don't know. There you go. And I'll get rid of that. we'll get rid of that. I'm going to go back. There was a AFR article, 60-minute timer. There we go, 60-minute timer. Leave. And there was an AFR article. This probably is, yeah, it's, there you go. The ASX has been forced to reverse trading, which wiped more than 400 million from TPG Telecom after admitting it wrongly suggested the telecoms giant was buying an automotive software developer, which was actually being acquired by. Oh, okay. Okay. So, okay, that's it, which was actually been acquired by a private equity firm that had a similar name. Okay, so this clears everything up. I had no idea why TPG Telecom was buying Infomedia. It's not, it's a different TPG. And the funny thing is, I thought initially I might have been wrong. I do know there's this other thing, this other private equity called TPG. But because ASX had in TPG, they had this, they're acquiring Infomedia. I thought, okay, Infomedia, there you go. Okay, so they made a mistake. The ASX made a mistake. Everything's clear now. I was so confused. This is interesting. I've never heard of a 60-minute timer, though. Yeah. ASX made a serious error by incorrectly cross-referencing TPG Telecom's share ticker in a price-sensitive announcement completely unrelated to us. This is fantastic. What a screw up by the ASX. And it all makes sense now. So everything's cleared up. I just didn't understand why. So it made me confused. So there you go. What a screw up by the ASX. That's sensational. Okay, so there you go. Let's move on. Get away from that. And let's go to a company coming in, number 4. We have a very small company called Roolife. No, it's not that company. Sorry, wrong one. Roolife Group. Share price up 75%. In fact, at one point today, it was up 200%. In fact, at one point today, the share price up 300%. Share price got to 1.3 cents after starting at 0.4 cents. Share price has pulled back a fair bit at 0.7 cents. But they announced RLG or Roolife supply agreement with Fortune 500 China giant Eternal AS. Wowzers. Bad gateway. Do I have to? Oh, looks like ComSec doesn't like me. So it looks like I have to go to not ComSec, Market Index. And now this is delayed, share price there, but yeah, a small Australian company getting in bed, not literally, with a Fortune 500 China company. Now, in saying all that, I've seen this in the past. I still remember a small ASX company. What was it called? It was called OBJ. And this was 10, 12 years ago. Got in bed, again, not literally, with Procter & Gamble. And it was like, wow. Oh, this company's made it. This small company has made it. But it didn't make it. It went bust eventually. I'm pretty sure it went bust. Because even though they got into a relationship with Procter & Gamble, there was nothing to lose for that company. And they just wanted to see if what they were doing might work. It didn't. And it went kapooey. Anyway, so whenever I see any sort of this sort of announcement or the beginning of a relationship between a small company and a massive company, you know all the power is with the massive company. Anyway, so they're pleased to announce the end of a partnership supply agreement, one of Eternal Asia Supply Chain Management. Okay, so we just don't know how much this might be worth. The annual gross order value of the contract is up to $110 million, subject to confirmed purchase orders and Roolife's ability to fulfill order volumes. Okay, sort of see why the market was really excited about this, because, hey, there could be potential, but can they realize that potential? And I think one of the reasons why the share price has pulled back a fair bit is simply because, share price is fairly low at 0.4 cents. And when they see the share price rally like this, shareholders who have been in the stock for a while go, oh, I can get out now. I can finally get out of this dog stock. And possibly Roolife is still a dog stock. And I'm pretty sure this is what this company does. They sell stuff to China, E-commerce and digital, well, that's what I meant. E-commerce and digital market provider delivering integrated marketing services and e-commerce operations in China, Australia, India, and across Southeast Asia. Market entry and e-commerce. There you go. By the way, this company does release an Appendix 4C, and let's see how they did in the most recent quarter. Is this time to get excited about this company? It's not on my list. It's not on my list. So obviously they were not cash flow positive. $779,000 in receipts and operating cash flow negative by $786,000. So well away from me even looking at this company even further, even though they released this. And let's have a look at the chart. So before this, chart looks horrendous. Nice volume coming in today, and you can see the selling, massive selling. And if you go back to last time share price was above 1 cent, it was back in late 2023, so 2 years ago. So there would be a fair bit of shareholders underwater. Even shareholders who bought like in late 2024 to 2025, they've seen the valuation of their shares triple in a fairly short period of time, and that would be added pressure on the share price. And that's why we've seen a drop. So not the sort of announcement that would get me excited, but there was an interesting reaction from the market. Okay, now on to company number 3. We have Lindian, L-I-N, Lindian Resources, and they got into bed with Iluka. So strategic partnership with Iluka for funding and offtake. I'm pretty sure I've talked about this company before. In fact, yeah, there we go. So I thought it might have been the same company. So Ben Hutchison likes it, and then I just mentioned it, and then he mentioned that I mentioned it, and that's why he sort of discovered it, because I just mentioned it. And that is one of the benefits for me doing this video, that or this channel, is that you can discover companies, and I might just mention a company on the fly, and then you put more research into it. And that's what Ben Hutchison did with Lindian. And I don't remember what this company does, except they're getting into partnerships with Iluka for funding and offtake. I actually didn't open this particular announcement up, but I did think that the share price would rally for Lindian. So Iluka to provide $32 million construction term loan facility over a 5-year tenure, long-term 15-year strategic partnership with Iluka for offtake of 90,000 tonnes. Now, just because there's an offtake, I'm not sure if this is set in stone, but just because there's an offtake agreement doesn't necessarily mean that's going to be significantly positive for Lindian, but I suppose it's better than nothing. Anyway, so let's have a look at the chart for Lindian. This one's going to look pretty good, I think. Lindian, oh, wait there. It might not, because the chart didn't look all that crash hot last time I looked. So let's have a look at this one. Oh, this had the potential to be a breakout. Share price did get to 15 cents today and has pulled back into a bit of resistance zone. This had the hallmarks of a potential breakout. So I'm going to keep this on my charts. I do think I actually included this. I think I did. No, I put it to my mining. Okay. Potential breakout for Lindian on a nice little partnership deal, strategic partnership deal with Iluka. Okay, now on to Amplia. So Amplia, I took a trading position in Amplia. Then I took profits because the share price rallied, went up a fair bit, maybe 100% after I bought, took some profits, and today I completely sold out because of this particular announcement with the share price down 26.25%. Positive accent trial top line data released. It says positive, so share price should go up. Nope, the market didn't like it. Share price down at 26.25. I actually did have a read of this, and I got pretty bored fairly quickly. So in these sort of announcements, I just wait to see how the market reacts, and wow, it's pretty obvious. So this was an automatic sell for me, just based off the market reaction. So just running with my profits for Amplia. And sometimes when I get these sort of announcements and it's sort of verbose like that, what I sometimes do is and by the way, I just don't understand what they're doing or what they're saying here. Sometimes I'll just put it into ChatGPT and see what ChatGPT says. And I won't say that it's down, share price is down. Okay, so it's just comparing to benchmark studies. And I'm going to say, why is share price down? 27%. Let's see if it says anything of note here. It's searching the web. I'm not sure they're going to find much on the web. There we go. So this is the problem with ChatGPT. It just doesn't find anything. So then, because I mentioned the share price has dropped, it just says, well, it's primarily driven by a capital raising via heavily discounted share price. But no, that's not why the share price is down today. It's because of this particular announcement. So that is sometimes. In fact, it says here the roughly 27% drop was primarily a reaction to share dilution from a large discounted capital raise, not a reflection of any negative clinical data. So ChatGPT can be wrong, and I think that's proven it. Anyway, so let's, and this reaction from the market is why I get out of this sort of situations, because it's a pretty negative reaction, and we had a really good negative, I can get rid of that. So when the share price doubled, I just sold, I sold 75%. And then just in case I was selling a little bit too prematurely, I keep the other 25% and hopefully it goes on a run. And in this case, it didn't. And then I just get out completely today because of this particular announcement. So that's Amplia Therapeutics. Pretty negative day for that company. Okay, now on to the stock of the day. And for me, this was a sort of a no-brainer. REA Group, one of the biggest companies on the ASX, and also say one of the best quality companies on the ASX. Share price up 6.84%, which is quite significant for this size company. So it's in the top 20, ASX 20. They did release results, and what shall I show you? I'll always have a look at that first. Appendix 4E. I didn't really look, I never look at the Appendix 4G, by the way. The first thing you'll note when you look at the Appendix 4E, I'm pretty sure this is the first thing I looked at. It's usually the first thing I look at. And the first thing you'll note, if you have a look at the numbers, look at that increase in profit, up 128%. No, this is why just looking at profit or just looking at earnings per share reported is the wrong thing to do. Profit was not up 128%. Well, reported profit, but real profit was not up. In fact, they did mention net profit after tax from corporations attributable to owners of parent up 23%. That, for me, is the real profit. And the reason profit is up so much is because of one-offs. Last year, there was a one-off. This year, there's a one-off. I think it was revaluating something. So revenue up 15% and the real profit up 23%. So don't fall for the trap of just looking at profit. I do know some people who do that. In fact, a lot of experts just look at earnings per share, go, earnings per share, wow, so this company is really cheap. Anyway, so that can be wrong. Typically, when I look at these results, I always go straight to, and it's always found about halfway through down, or maybe more than halfway down. We have director's report, remuneration. There we go, remuneration report. Usually the financial reports are just after this. And it can go for a while. It just keeps on going and going. I don't really care. Here we go, financial statements. Or financial statements. Okay, so this is a profit and loss. And if we look down, here we go. Impairment, reversal, and expense. Last year, it was negative 128 million. And this year, it's a positive 110 million. So if you take those away, you get the real profit. Because this is an impairment. This is a one-off. It's not real. It's not real. Well, it's sort of, well, it's accounting real, but it's not real. Anyway, you can go to note 5 to try to see what it means. But if you have a look at their media release, they do mention a net profit up 23%. So this is the one to look at. Earnings per share 427 up 23%. So that is the real profit, in my opinion. It's not the reported stuff. In fact, they probably mentioned that somewhere. Reported profit's this, but real profit or statutory profit, or whatever it's called, is something else. In fact, they might mention in their presentation. Here we go. So here it is. So in fact, in the financial year 25 performance, net profit after tax, and then reported net profit after tax, which is significantly higher and up 124%. So yeah, so make sure you to get the full understanding of how a company's perform, make sure you look at the right thing. But anyway, in saying all that, revenue up 15%, profit up 23%. For a company like this, by the way, that's pretty good. That is pretty good. Now, I'm not sure this would be in what do you call it? I'm not sure this will be in FinChat just yet. I'd be shocked and very happy if it is. So let's have a look, the financials. It's not in FinChat just yet, but I expect it to be in the next few days. But I might do a video on this. I might do a video on REA Group because the results were pretty good. Anyway, so one of the things I do look at when it comes to REA Group is how they're expanding overseas. So they are expanding in India. In fact, they do have the Australia revenue, India revenue. Not yet profitable in India. They are not profitable, EBITDA negative, but nice growth there, 25% growth. I'd like that to be a little bit stronger, but that's okay. So this is something exciting about REA Group. They're expanding into India because eventually I just can't see how they're going to continue to expand in Australia. I just don't see how they're going to do it. Anyway, so that's something I do struggle with REA Group, but still performing really well. And this is exactly the results you want to see. And that's why the share price is up. The other thing is how the share price or how the results met expectations. Where is Capital Brief? There it is. Pinnacle share price soars on financial year results. So REA Group. Financial year 25 result hit estimates. There you go. It hit estimates. Sometimes in these Capital Brief articles, they do mention how the results do compare to estimates. Let's have a look-see. So E&P analyst Ensho Rakovsky said the result was broadly in line with consensus estimates. So it wasn't a beat, it was broadly in line. So it's really surprising when you see that and the share price is up. It just means, yay, well, yeah, things are moving in the right direction for REA Group. Now let's have a look at the chart for this company. And is this a breakout? Remember the share price had pulled back a little bit because there was a fear that the new people who are acquiring Domain are going to destroy REA Group. I don't know where that thinking comes from. That's why the share price fell a fair bit. Somewhere here. I think it was maybe here. No, I don't know where it was. But I'm pretty sure that's one of the reasons why the share price fell. Looks like the share price fell on their half-year results. 11.4%. Anyway, almost close to a breakout. Share price has pulled back a little bit. So share price was up about 8 or 9%. So share price has pulled back a little bit, but yeah, that's REA Group coming in at number one, the stock of the day. Now onto the chart of the day. So I did see Novonix mentioned in a Facebook group. And I think the comment was, who's willing to buy this one? Looks like it's starting to turn. So let's have a look at Novonix. And I sort of was like, okay, yeah, I definitely could see it. Share price has plunged from 65 cents all the way down to 42 cents. So it's a pretty quick plunge and definitely probably oversold as well. And you can see how much volatility is in this company, by the way. And we saw the share price sort of maybe found a bit of a bottom. And yeah, so share price has started to maybe move back into an upswing. So I can definitely see why they're saying that. And by the way, the share price is up a little bit today, up 2.25%. The other thing is when you see the share price drop, have a look at the volume. So on the rise, a lot of volume coming through, but on the drop, decreasing volume. But the one thing I'd like to see is with the share price starting to rise, I'd like to see big volume coming through. That would make me excited about Novonix. But other than that, nothing much to else like about this company. Well, for me anyway, because there's still very much a story stock. Okay, so that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.